I'm delighted now to be moderating a panel discussion on the role of capital markets in addressing sustainability reporting, ESG reporting, data and investors' needs. I'm McGuinness, Chair of the Policy and Resources Committee at the City of London Corporation, and I'm delighted to be joined by an excellent panel today to discuss this with us. I think the theme of our discussions is very, very timely, given yesterday's announcement of the establishment of the ISSB. And I agree with the remarks that we've just heard about that announcement being absolutely pivotal. We think that this is a really important step in the right direction, which promotes much needed integration of financial and non-financial reporting within a common architecture. So let me just briefly introduce my panel before turning over to them. We have on at my side Erik Thedéen, Director General at the Swedish Financial Supervisory Authority and Chair of the IOSCO Sustainable Finance Task Force, STF. We have joining us virtually Dr. Mohammed Omran, Chairman at the Financial Regulatory Authority in Egypt and Chair of the IOSCO Growth and Emerging Markets Committee. And we have Lee White, Executive Director at the IFRS Foundation, and Ned Salter, Global Head of Investment Research at Fidelity International, again joining us virtually today. So I'm going to start by turning to you, Erik. And I know that IOSCO has been particularly active on sustainability issues recently. I mean, really very, very active, looking across the piece from investor protection issues, manager disclosures, the role of ESG data and ratings providers. I'd really like to look at the sustainability-related disclosures by issuers. Can you give us an overview of IOSCO's recent work on disclosures by issuers and how this is contributing to building a global green playbook?
Yeah, thank you, and thank you for having me. You know, this has been an extremely intensive, like 2-3 years within IOSCO, and as Ashley Alder spelled out, this is core of what we do as market regulators to safeguard the integrity of markets, to safeguard that the information that investor gets is correct. So when we started this work, it was clear for us that this was not met. It was in this alphabetic soup. It was a fragmented market. It was fragmented disclosure. And we started to think, what kind of role would IOSCO have in this? And of course, we have a role as we could actually act as the coordinator and standard setter to coordinate a harmonization of disclosure. So we issued surveys and stakeholders came back, more or less all of them saying that you need to act in order to harmonize disclosure. Said and done, we started a task force and we started to work intensively also together with the IFRS. IFRS having already the governing structure for disclosure, which is extremely important. To have the governance and also, of course, they had the expertise, mainly, of course, then in financial disclosure. But more and more so, they also realized that this is something that they need to engage in. So I think what we have been doing so far is to, let's say, push IFRS and support IFRS to actually deliver, but also always keeping our role with a lot of integrity, namely, to scrutinize and to assess whether the standards and the governance structure that eventually comes out will meet the needs of market regulators and IOSCO. And now we are pretty far advanced in that. The announcement yesterday was extremely important, pivotal, I think that was mentioned, to have, if anyone had said to me 2 years ago that we would be here now, I would definitely not have believed them, and no one else, I think. So this is pivotal, it's extremely fast moving, but of course there is a clear present danger out there that we need to handle. Now, and maybe we'll come back to that later on, the most important role of IOSCO actually starts now, because as my chair explained, this is, you know, how do we get the IFRS standards into something that is in the regulatory regime in different jurisdictions? And that's not an easy piece, but that's where IOSCO really could make a difference.
Thank you very much. And Lee, turning to you from the IFRS perspective, and look, congratulations on the fantastic work that has gone into this, and on the announcement and development that we heard about yesterday. Could you please elaborate on the interoperability of the future ISSB standards with any additional reporting requirements that individual jurisdictions may set beyond the global baseline?
Thank you, Catherine, and thank you very much for the invitation to be here today. I will come to your question. I think I'd like to just acknowledge, first of all, certainly with Ashley and with Erik and the IOSCO leadership for their support during the last few years. And it was an important day, but equally with that sense that the real work now needs to start, and a lot more needs to be done, but we're in a good place to set up and develop what we think will be the right level of standards going forward. Now, to your question, when we think about the mission is to get international comparability and consistency. And then how do we deliver that? Well, we need to make sure that we give every opportunity for jurisdictions to be able to use these standards. But we do know in this space of the broader sustainability reporting that there'll be jurisdictions that will wish to go further than the DNA of what the IFRS foundation is, and that is to really deliver the material information for investors' needs. And so the foundation will work towards developing a global baseline of standards. And it's that global baseline that we would like to see adopted in as many jurisdictions as we can, because it'll deliver that international consistency and comparability. But then how do those work in conjunction with jurisdictions that wish to go further and deeper and faster? And that's where this concept of the interoperability will occur. And so we can see clearly how additional requirements would be built onto the standards from the ISSB, and that will allow then the formula to be international comparability where it's needed to suit the investors' needs, and then to build upon jurisdictional needs to cater for their policy outcomes that they wish to desire as well. So that's how we would see it working. We've advanced well with prototypes, and we can certainly see those steps occurring in the next few years.
Thank you very much. I'd like to probe this question of interoperability perhaps a little further. And we have in our studio audience today the co-chair of one of IOSCO's work streams, Sheldon Mills, who's also an executive director at the UK regulator at the FCA. Sheldon, I know that this is an issue, I know that the matter of corporate reporting is close to your heart generally, and I also know that you have given considerable thought to this question of interoperability. Could you elaborate just a little further on how you see this interoperability working in practice, with jurisdictions, for example, embedding a double materiality approach beyond EVC, which I am reliably assured means enterprise value calculation, but you might perhaps like to enlighten me on both that and double creation. Thank you, creation, that on and double materiality.
Excellent, thank you, Catherine. Well, first of all, just a huge congratulations to Lee and the whole team at IFRS for getting us to this stage. The launch of the ISSB cannot be underestimated. It's one of the most important launches at COP26 Finance Day yesterday, because as Ashley and Erik and Lee have all said, we do need to get to a common baseline as quickly as possible for corporate reporting. Some jurisdictions will be further along their sustainability journeys than others, and it's really important, as everyone said, that you respect that, and that's important to get people engaged and around the table around that common baseline of corporate reporting. Basically, it's simple, really, in terms of enterprise value creation and double materiality. Enterprise value creation is at the sort of core of how a firm looks at its risks, and it's the impact of those risks on the firm and its ability to create value. Whereas double materiality looks at what is the impact of the firm on things such as climate, nature, etc. So some jurisdictions, rightly so, want to think about how you go through risk and the impact on firm and use the common baseline, a single materiality standard. But others, for policy objectives, want to put upon that this double materiality approach. So ask firms, what is the impact of you on the climate? And what's great about the IFRS's work is that it can establish a common baseline so that everybody can get to that baseline in terms of enterprise value creation, and then others can add on a building blocks approach to that and go on that double materiality journey. Very briefly, we're doing that in the UK. So the proposal from the UK government in its recent roadmap on sustainable investing says that the ISSB standards will form the backbone of corporate reporting, and then through the green taxonomy may well add certain policy objectives in a double materiality approach. And that hopefully will be a good test case for how this can be done around the world. But the important thing is that we get the ISSB and get those common baseline standards in place.
Thank you very much, Sheldon. I'd like to turn now to Ned. Ned, I'd like to ask you what you see as the main challenges faced by asset managers in embedding ESG risks in their investment decisions and the related disclosures to investors.
Thanks a lot. It's a very interesting question, and I guess on the panel today I represent the view of an asset manager, and so I classify the challenge associated with embedding sustainability in the investment decisions and related disclosures into three categories. The first would be data availability and consistency. The second would be the importance of measurement, and the third is what I would call authenticity and intentionality. So on data availability and consistency, we absolutely welcome global standards in this regard. And as an asset manager, we are exceptionally grateful for all of the bodies pushing for the top-down globally standardized approach with a terrific announcement, obviously, yesterday from the ISSB. And absolutely, we need to develop these standards to build that trust in markets, to ensure appropriate asset pricing, and really to deliver what I would call truth in labeling. In the products and services that asset managers offer our investors. But the current evolution of the data and the varied approaches to sustainability-related data can't hold asset managers back. So we've got to steam ahead. And Fidelity has, for example, has built a proprietary sustainability based heavily on quantitative data, which will be informed by the global standards. Really using that to develop our fundamental analytics and engagement to inform our assessment of sustainability. So I think the role of an active asset manager is to help even further build out this delivery of the data profile, not just for Fidelity, but for the industry. Yeah. On the importance of measurement, I think we've absolutely got to move from single materiality to double materiality. I couldn't agree more with that statement. And it's great that many investors and asset owners are pushing very hard for that. But even in the absence of that, asset managers have a responsibility and an obligation to deliver outcomes in portfolios that are in addition to a pure financial return. So we have to ensure that capital is being deployed into the companies that can make a difference in the real world. And sometimes we say creating sustainable portfolios is easy. Creating a sustainable world is more difficult. And finally, on the point of authenticity and intentionality, this is all about integration. Sustainability characteristics of issuers need to be assessed ex ante, not ex post. A purely data-driven ex post analysis of sustainability, in our view, might lead to an inauthentic approach of investing. So it has got to be the investment professionals themselves assessing the sustainability criteria. This isn't two jobs, this is one job. Sustainable investing is just investing.
Great, thank you very much, Ned. And now I'd like to turn to Mohammed and look at this from a slightly different angle. And Mohammed, can you give us your thoughts on the main challenges that market players in emerging countries will face as sustainability reporting and ESG investment requirements are rolled out? I'm hoping we have Mohammed on the line. Excellent.
Do you hear me?
We can indeed, thank you.
Okay, very good. Thank you very much for inviting me for this very important discussion about the sustainability and the climate change. And when it comes to the emerging markets, as you do understand, since we have the Sustainable Development Goals and there are huge pressures over the regulator in every jurisdictions to deal with the Sustainable Development Goals. For emerging markets, we were waiting for a sort of a baseline, and I was very pleased about the announcement of last night about the establishment of the ISSB, which will provide us with a baseline to deal with the sustainability and disclosure related to the task force on climate-related financial disclosure. We did not wait as emerging market to have this baseline, but I think that many of jurisdictions as emerging market was working to introduce their own rules and regulation concerning the corporate reporting related to the ESG and climate-related financial disclosure. I think within the IOSCO itself, in which I'm chairing the Growth and Emerging Market Committee, we have the task force on sustainability back in 2019, and we ended up with about 10 recommendations about how to deal with sustainability in emerging markets. In the meantime, we have many challenges, as I was mentioning, that we need to attract more investment to the emerging market. So the issues about the comparability and the issues about consistency is very important about the corporate reporting, as well as the entire ecosystem. We need to have support from the policymaker, from the asset management, from the regulators, from the stock exchanges, in which the entire ecosystem should work to enhance sustainability in the emerging market. And the other issues is related to the awareness. And I think one of the things that could be considered a big challenge for emerging market is about the culture in the economy itself and the market itself. And here is the role of the IOSCO itself. I know that Ashley is very keen about the enhancing awareness and enhancing the understanding of the sustainability in emerging market. And I think IOSCO can step in and provide more and more training programs and awareness for the jurisdiction in different emerging markets. And the last point in which I might touch on very quickly and see about my second intervention is about the challenges we're having, not only the emerging market, but the entire world, whether we have a problem in the financing gap, or it's also in the demand side as well. It's the demand and supply side, whether or not we have sufficient finance, sufficient program that could be considered green to be financed through the needed funding to achieve the sustainable development goals, as well as the net zero carbon emission by the year 2050. I will stop here, and I'm looking for the second intervention about the relation between supply and demand side in this area.
Thank you very much. I look forward to coming back to that in a second. Lee, I'm going to turn back to you now and ask you what you see as a reasonable time horizon for having a climate standard, and how long it can take for the ISSB to cover all the other sustainability topics that investors are also looking for or claiming for in their portfolios.
Lovely, thank you. So, very much a common question we've been getting at the moment, particularly around climate. So let me try and unpack your question in two parts. The first is you were asking around the climate related disclosure standard. And yesterday we did publish the prototype. And we use this word particularly because we're trying to distinguish the work of the trustees at this moment compared to the new board. But that's been, I believe, a very well advanced piece of work, very much with the input from IOSCO. And we would see a time frame that would build out quickly into 2022. And when I say that, Catherine, I mean, first of all, that prototype being considered by the new board, and if the new board believes it's of appropriate or they may wish to change it, amending it in an appropriate way to take that forward to being an exposure draft. Then with the due process of the new board, we would go through the appropriate levels of consultation. But really what you're asking is when will we see a new standard? And we would certainly say at the second half of 2022, that standard would then be available. Your second question was, what about all the other areas? And yesterday as well, the first step was a prototype around general disclosure, which builds really on the 4 pillars out of the TCFD. And that, if it became a standard in the same time frames I was suggesting with climate, would at least provide an interim phase for corporations to provide information that's material to investors in the other areas of sustainability reporting. But then the new board will need to go deeper and look at other areas, and it would do that through an agenda consultation. So phases, prototypes, perhaps moving into exposure drafts and into standards during the course of 22, and then for the new board to determine where it sees its priorities going forward and moving at those with pace as well.
So the weight and pace of work is not going to decrease anytime soon?
No, this is just the start.
Yeah. which actually is absolutely appropriate given the urgency of the situation we're facing. Thank you very much for that. And Ned, I'd like to come back to you, if I may, and ask you what kind of metrics investors and regulators should consider when they look at the ESG performance of an investment fund.
So I think this links back to my earlier comments, which is really in order to determine the authenticity of a sustainable approach of an asset manager, you really got to look under the bonnet. The building blocks that the ISSB as well as IOSCO's guidelines for disclosure are absolutely critical and welcome developments that are going to move the needle in the right direction regards to fund transparency and communication. But data in third-party sustainability ratings and carbon metrics just don't tell asset managers the full story. Climate change is a great example here. Often people will compare the carbon emissions of two portfolios to identify the greener or more sustainable portfolio. But it really depends on what you're trying to achieve. Because carbon emissions are heavily concentrated in a few sectors and activities, it is possible to reduce the carbon emissions for many investment benchmarks by 5% per annum simply by removing 2 to 3 issuers per year. And this could create a great decarbonization trajectory, but are we really making a real world impact? And so my advice to those investors and regulators who are looking to assess the ESG performance of an investment fund would be to ask the following questions, really. How are asset managers integrating sustainability considerations into the investment process? How authentic is that integration process? How standardized is their approach within their investment process? Who is doing the sustainability analysis, and how proximate are those people or those tools to the capital deployment process? What are the social and environmental
I think we have a freeze, unfortunately. Isn't it ironic how it always happens when somebody gets to a really interesting point? Seems to be the way of things. Let's see if we've let's pause on Ned for a moment and then see if we've got Mohammed on the line and ask Mohammed, with sustainability reporting now high on the agenda, how do you think coverage of and more ESG investments in emerging markets is going to develop into the future? Or is this a complete break on it? No, fine. I'm very sorry. Our virtual guests are not with us. So I will go to you, actually, Erik. And could you give us a flavour of IOSCO's immediate and long-term priorities to continue enhancing the sustainable finance playbook?
No, I think we just started. We will definitely have a full agenda going forward. As I think I alluded to a little bit before, I think short term, let's say the next year, will be very much concentrated on to deliver a potential endorsement, so interacting with IFRS and through our technical expert group, scrutinize and assess whether investor needs are met. Also, and extremely important, I think it was touched upon by other speakers, is the insurance framework. Mm-hmm. Some of the drawbacks with the alphabetic soup, disregarding the alphabetic soup, was that it was also not audited. So it was very voluntary and a risk of cherry picking. And now with the IFRS kind of governance structure, with that system in place, we will also need to have auditors on board. So we are planning in the short term to have roundtables with the big auditing firms in order to safeguard that we actually have the auditing industry with us if the launch is as quick, and I hope it will be as quick as Lee says, namely in the end of 22. Then it's a lot of work that needs to be done in the insurance side. And then I think also coming back to what Omar said from Egypt, I think we have a lot to do when it comes to capacity building. It's a big difference when we're talking about corporate disclosure for climate vis-a-vis financial. As Ashley said, most of the emission comes from the emerging markets. So to have the capacity, to have the baseline, to have the disclosure actually working also in the emerging markets is so much more important than some of the reforms that came out after the financial crisis in 2008, because that was, of course, a crisis that very much focused around the developing world and the major financial centers. Now we need to get it to the major developing countries who are one of the major emitters. Of course, also the developed world are also big emitters, but I think the capacity building part of that. And I just wanted to end with, I think, an important thing to say at this stage is that what we're talking about is disclosure, but in the end, if we get disclosure correct, we will price risks in different corporates, and hence we will actually steer capital to the ones, not only the ones that are super green, but the ones that has a good transition plan to become green. That could be an oil company, but that has a very good transition plan. So if you get that disclosure, that baseline correctly implemented around the globe, eventually that will steer all mainstream finance will go green, not only green funds and special products. And I think that's extremely important.
Yes, back to Ned's point that we shouldn't be talking about sustainable investment. We should just be talking about investment.
Exactly.
Yes. And Lee, I wonder if you have any observations on the emerging market challenge and what we've just heard from Erik and indeed from Mohammed just a few minutes ago.
Certainly when our chairman made the announcements he did yesterday, right there in the middle was a key message about the priority, or a priority being the emerging and developing markets. And you can hear from the discussions already why that's so important. And for the foundation, therefore, we really need to build into our next steps, importantly, how that engagement will work with those markets. Now, if you look towards the financial reporting side of things, we introduced what we call IFRS for SMEs. And so that was our attempt to try and bring a level of proportionality to those markets so that the key principles could be used without necessarily all of what is encompassed under a full set of IFRS reporting. Now, we need to determine with the new board whether that's the appropriate approach with these markets as well. And importantly, as well, as we think about the global footprint of the IFRS Foundation and the ISSB, making sure that there's representation that allows the emerging and developing markets to come along at their pace in order to pick up those standards as well. So that would be two aspects, I think, very high on the agenda for the new board. Yeah.
Great, thank you very much. And had Ned stayed on, I wanted to probe him a little further on ESG data issues and data gaps and how data gaps could be bridged. I don't know if either of you have any thoughts on that.
No, but I think that's an extremely important question. I think when we think about it is that if we have disclosure correct, if we have asset managers, we also issued a report around if they have the governance and the structures and the analytics streamlined, and also the rating institutions are more transparent in how they conduct their rating assessments, basically, I think that will form some kind of system that actually will push the system to have more of harmonized data. So I think sometimes you go directly to the data, but you also need to discuss the overall system that creates the data. And if that becomes more harmonized, well, eventually, I guess that the data will also be more harmonized. But again, this is an extremely important question.
Any thoughts, Lee?
I would tackle it slightly at a higher level. I fully agree with what Erik said. If the standards are able to deliver this sense of transparency, then to me that drives a lot of then what data is revealed or what data. Erik also made the value point about assurance, and that's got a role then to help on these areas too. Yeah.
And I'm just checking if we're going to get our remote speakers back. Yeah, I'm afraid we're still having difficulty connecting with them. I am hopeful, we have a few minutes left, that we will still be able to, but if not, I will pose my questions to them and see if we can somehow put that on the record of this, which remains, because I think Mohammed was going to come on to some interesting observations on the demand side, but we'll have to try to get him back to hear what those are. So, what are your greatest hopes and fears over the next few months as we carry this important agenda forward?
Well, I think for us, our hopes, if I use that term, would be more around, we've important announcements yesterday. As I said earlier, the real work now starts. We've got to make sure that we deliver to expectations within the market. We've got to develop new expertise inside the IFRS Foundation. So we will be in that battle for talent, like many are at this time. So that's an important aspect. And I think if we can show genuinely the value through the early new standards of what the new board can do, it will create a further level of momentum and therefore allow the new board to develop its success even further. I would see challenge also in that last aspect around assurance, and that's something that the new board will need to do as well, to work with the assurance standard setters and with the regulators to make sure that there is alignment amongst all elements of our systems.
Yeah, thank you. And Erik?
No, I think we are going into this extremely important endorsement process, and I think what is important now, we have support from G7, G20. A lot of countries also directly supported the announcement yesterday by ISSB, but now we also need to see that happening on ground. So when EU issue their standards, there should be this baseline of ISSB. Potentially, if US does something that is some kind of alignment with their standards and on a more detailed level, and of course, the same goes for other jurisdictions. So what we now are saying on a higher level is actually seen on ground. I think that's a challenge and extremely important work that we all need to do in the coming months.
Thank you very much. And with three and a half minutes left to go, we're rejoined. So Ned, I'd like to ask you very quickly for a minute on data standards and data gaps, if you'd like, and then I'll go over to Mohammed very quickly. I'm sorry we lost you.
Just very quickly, no problems. I think just very quickly, I would say, on data gaps, I think, as I said before, data's one of our most critical needs, but it's not enough. I think data should inform, not dictate investment decisions. The data will come, and we've got to focus on progress over perfection. And as we've talked about in this panel, the hard work is just beginning. We've got even more hard work ahead. And active managers have a huge role to play here. We've got to speak to companies. We've got to speak to experts. We have to come together as an industry and collaboratively engage and support the evolution of data. And we need to make those investment decisions, ultimately qualitatively informed by this really robust data that we have. So the efforts that are being made to standardize, as we've talked about, are critical. And I think regulation is obviously going to help. So EU CSRD, enhanced TCFD guidance, and market-led pressure as well is the final thing I would say, with investors like Fidelity insisting on higher quality data and useful data from the issuers that we deploy capital to.
Thank you very much. And I have rushed you unnecessarily, rather like when I order a taxi, the time has just gone up again. Is there anything that you haven't said that you would like to have said to us before I turn over to Mohammed?
I'm happy to turn over to Mohammed.
Great, thank you very much. And Mohammed, with sustainability reporting now high on the agenda, how do you think coverage of and more ESG investments in emerging markets is going to develop into the future? I was looking forward to hearing you develop the themes that you started on in your earlier remarks. Do we have another freeze?
No?
Yes, hello, Mohammed. Did you hear that question from me?
No, I did not. Can you repeat it again?
Absolutely. With sustainability reporting now high on the agenda, how do you think coverage of and more ESG investments in emerging markets will develop into the future?
Yeah, okay. I think one of the concerns that I have is whether we are having the right balance between the demand and supply for sustainability investment available to emerging markets. I'll give you an example. The reality now is in the area of the clean energy, the world major emerging markets like China, like India, and other several big emerging markets are moving to the center of the clean energy. But taking as a whole Asia, for example, they are dominating the majority of the MSCI Emerging Market Index, the world's largest investors in low carbon energy sources. But if you look to the other emerging markets, they are facing problems because they would like to attract more investment to their market. They would like to promote more the sustainability related products. And here is the challenges that we have, that asset managers and investors, they would like to invest in the sustainability related products, but the emerging market, they are looking for how to meet this requirement actually. So the reality is that whether or not emerging market can adapt quickly to the requirement, to the baseline that will be issued by the ISSP later on, and to make sure that they have a ready-made product to be provided for financing for the asset managers. In reality, I think the emerging market, they have the potential, they have the opportunity, and they have the growth potential that could attract more investment to their markets. And I think emerging markets are in a great position to step up their games and to be part of the solution rather than being part of the problem.
Thank you very much, Mohammed. And actually, I'd just like one final question to you and to Ned, and that is, what are your greatest hopes and fears for this agenda over the next year? What should we be really pressing on? Any thoughts that you'd like to offer, Mohammed? I think that may be another freeze. Ned, did you want to comment at all on that?
Can you hear
I think that, one of the things...
Sorry, I did not...
Mohammed, I'll go to Ned first of all, and then we'll come back. Ned.
I think one of the things that we're most excited about at Fidelity is a lot of what we've talked about today, which is really the move from a single materiality to a double materiality. And I think that expectation on capital markets, the obligation that those who deploy capital on behalf of asset owners have themselves an obligation to ensure double materiality, I think is really going to be the seismic change that society is going to need to ensure that issuers who are powering change in the world are the companies that receive the capital that they so desperately need to deliver. That is the single thing that we are most excited about, and we just love speaking to our clients about the sort of additionality of making a real world impact in addition to the need to deliver financial return.
Yeah. Thank you very much, Ned, and for your contribution so far. And Mohammed, it was simply a closing question. What were your greatest hopes and fears for this agenda? I think I may need to pass on that. Okay, I think we've had a great discussion. I think we really have been given some, indeed, great hope for the development of a global playbook. What I really take away is that the announcement yesterday on the ISSB is perhaps one of the most significant developments and announcements from this COP. And so thank you again to everyone who's worked on getting it this far, and thank you to our panel both for their contribution today and for their tolerance during our technical issues, and thank you all very much for watching. Thank you.